So this is my portfolio project for Finance 447, spring 2015 semester. So my four companies, the two U.S. companies are Boeing and Starbucks, two ADRs are Sony and British Petroleum or BP. The portfolio as a whole performed very well with an 18% gain year to date, and we were assuming a $10,000 investment in each. So my total as of now is $46,924, and so there was an increase of $7,184. Main thing I learned was that U.S. companies are experiencing the headwind of the strong U.S. dollar, making their earnings less after translation from their international cash flows to U.S. dollar. But U.S. equity markets are still pretty bullish for the year. I think this is because earnings are not as bad as expectations were. We're seeing that the Forex hits aren't as bad for these U.S. companies. For the ADRs, I think it's important to look at their home market. So for BP, we're going to look at the Financial Times Stock Exchange, which is also up 6.49%, which would explain at least a little bit as to why BP is also increasing. For Sony, which saw the biggest gains at 36%, Japan as a whole is also seeing similar gains. Tokyo Stock Exchange Index is up 12.65% for the year. We're going to start with Starbucks, founded in 1971. This was just something extra I thought was interesting. $100,000 investment at the IPO of Starbucks would be worth a little more than $10 million today, which would be a nice investment return. So Starbucks versus S&P. S&P right now is around 3%, and obviously Starbucks outperforming by a large scale. Right here on April 9th, they had a stock split, so their stock price went from high 90s to mid 40s, which their investors like. After the Q2 earnings call, which they did well, Starbucks did well in, Scott Mull, their CFO, talked a little bit about their commodities and their foreign exchange hedging. He said 70% of 2016 prices for commodities, for coffee prices, were already locked in. Foreign exchange, he said, for this full year of 2015, they're expecting a hit of 2% on their earnings and their revenue from foreign exchange translation. So as far as the commodities go, this graph pretty much displays it very well. Starbucks goes up as coffee goes down. This is a coffee index, CAFE, and you can see as this goes down, they definitely benefit. Same with right there. This is year to date, and correlation is a negative 0.74. Same deal in the short run. They have three primary segments, as you see here. This is the main one they're focused on. They have China, Asia, Pacific is where they're seeing the most growth and where their main focus is. As you can see right here, this is blue is 2014, yellow 2015. You see growth in all of them, but the biggest is right here in China, Asia, Pacific segment. But Americas is still seeing good growth, but it's mainly right here. The highest unit growth over the last 12 months exactly was 769 restaurants in the CAP segment. And I think right here, this is important. I think a lot of this 2% hit comes from their acquisition. They acquired Starbucks Japan in 2014. So they fully acquired it. They become very exposed to the yen, which is being depreciated. and I think that's where that hit, most of it at least, comes from. As you can see right here, the Japanese yen is this graph that it's kind of light, but it goes exactly with Starbucks' share price until here it kind of levels off. But from right here, it is exactly with it. So this means this cross rate it's taking more. It's showing the depreciation. It's taking more Japanese yen to buy $1 US. And I said earlier that's where the 4x hit's coming from. So shouldn't that make the share price go down? I think not, because I think the Japanese economy benefits so much from the yen depreciation that even with the exposure to it, the increase in sales they're probably having in Japan is benefiting them more than the risk that they have from the exposure to the yen. As far as the Americas goes, you're going to see, obviously, it's mostly United States, Mexico, and Canada. The rest aren't very big numbers. So we can look at these exchange rates a little bit. US dollars appreciating against both of them. And this is the green is USD Canadian cross rate, and the purple is USD peso cross rate. So as this goes up, these graphs go up, it's taking more Canadian dollars and more pesos to buy US dollar, which should hurt earnings. But I mean, as you see, they're probably well hedged against this because it's not having any downward effect on their stock price, really. Maybe in small amounts. Let's say right here the share price goes down, and as the US dollar appreciates way more. But for the most part, it's not in the long run. It's not affecting them that much. They're probably. I'm thinking they have a very good hedging strategy. This is just some accounting on it. From their 10K. Most of their derivatives are coming from foreign currency and with cross-currency swaps. So, we're talking about the yen, so we're going to move to Sony, the next company, which was ADR. Right now, Sony has this one Sony strategy, which is actually working pretty well. It's a turnaround strategy, where they're spinning off, just like many other companies, spinning off units that aren't profitable, and they're trying to focus mainly on entertainment, gaming, and digital imaging. And so as a whole, Sony as a company in the long run is not doing that well. They're still operating at losses for 5 years. Share price is down negative 13%. But I think we're seeing a turnaround. And most of it, I think, is coming from the Abenomics, which we'll talk about a little bit later, which is the depreciation of the yen. This is just showing you right here. I wanted to note there, this was a Q1 earnings beat, and one day it jumped 15%. And same with right here for their Q2 earnings. This is just showing some outperformance. This is straight off of their 10Q, their most recent one. And I thought this was important to note that some of their segments that have historically been non-profitable that they would be spinning off, they're actually seeing profits from those with favorable yen exchange rates. And this is very important. They're seeing the most growth in United States and Europe. That's where they're targeting right now. This is the Abenomics I was talking about. Basically, they call it 3 arrows: fiscal stimulus, monetary easing, and structural reforms. The Economist calls it a mix of reflation, government spending, and a growth strategy designed to jolt the economy out of suspended animation that has gripped it for more than 2 decades. So, the main thing we're taking out of it is them lowering the value of the yen to increase exports to stimulate domestic growth. The QE aspect of it is they launched it in April of 2013 and they were purchasing 80 trillion yen worth of assets a year, and that's that main downward pressure of the yen. So this is the USD Japanese yen cross rate. So as this goes up, Japanese yen is depreciating, and this is over the last 3 years. So kind of from their turnaround point, they're low, back up. So they're definitely seeing these benefits. You know, as the yen is depreciating, Sony share price is coming back up, and I think that is the main factor causing that. Is the yen. This is an indirect form, basically. We're just looking at the direct form of the cross rate. So now we're going to look at the Japanese yen euro. So this means as this goes down, it's taking less euros to buy yen. So same effect with the dollar. As this is going down, Japanese yen's depreciating against the euro. So my outlook on Sony is I'm bullish. I think the continued low values of the yen will benefit them greatly, and I have faith in their turnaround strategy. So we're going to move on to Boeing. This is showing you Dow Jones Industrial Average versus Boeing. You can see that they're also an outperformer. And their main focus right now is on commercial sales rather than defense spending, which I'll show you next. They're seeing increases in these sales, but defense is seeing pretty much all declines in the last year. So, and this is showing you where the value is coming from. So it's 46% Asia right now. That's where they see the growth. So it's mostly commercial airlines in Asia where they're focused on right now. Their outlook, they're seeing in 1993, 73% of air traffic was America and Europe. In 2033, they're expecting that to be 38%. They're expecting Asia to catch up basically with the air traffic of the Western world. Last year, two of Boeing's biggest orders were Middle Eastern, so you're seeing growth in the Middle East as well. Qatar Airways and Emirates was those contracts. Boeing stock price and oil. I think this is important because their executives are consistently talking about how low prices of oil aren't going to hurt their share price. So what that means, Boeing is producing fuel-efficient planes, but as oil goes down, fuel efficiency becomes less important. And I think this shows that they are pretty true. Their statements are pretty true. That you're seeing Boeing go up with these low oil prices. So I don't think there's less demand necessarily for fuel-efficient planes. The main thing that's driving is the value of the U.S. dollar. As you can see, this is for 1 month. Wanted to show the almost mirroring graphs of Boeing to the U.S. dollar index. And this is a little bit longer. This is 1 year. You can see still very similar movements. As the U.S. dollar appreciates, Boeing's share price is going up. And this graph shows the airline index relative. This is where their sales are. Like I said, this is where their focus is right now. And this is very related to Boeing's share price. As airlines do well, Boeing will do well. And moving on to their cash flow hedges. So this is just some information that's from their SEC filings. Their 10K. This is the actual amount of outstanding derivatives they have, and I think this is pretty important right here. You see 2,585. It's much more than the rest, and that's for their foreign exchange contracts. But another important note is these contracts, they say do not receive accounting treatment, which means they're saying these do. a lot of these go into the balance sheet and the income statement as under something else, but I thought it was really interesting in learning about how derivatives are accounted for. This is just showing you they're taking a loss right here on year-to-date foreign exchange contracts and commodity contracts, mainly foreign exchange. That's a negative 90 million. So my outlook is, as Boeing continues to head east, it will continue to face these forex headwinds because the U.S. dollar, I expect, will continue to appreciate, and a lot. Say like for the Chinese yuan, it's managed. I think it's going to be tough for Boeing to generate high revenues in the Asian markets, I believe. So I'm kind of not necessarily bullish or bearish on Boeing. It has some uncertainty. BP is the next company. So it's a super major oil company. If you live in Louisiana, you know them. Exploration, deep water drilling. You know BP. Year to date, they're performing actually really well. 15% year to date, and you see companies like Exxon and Chevron. Chevron's flat, Exxon's negative 5%, so they're beating their competitors as far as share price goes. This is BP versus S&P 500, another outperformer. Alright, so this graph, this is going to be US dollar and oil. So US dollar going up. US dollar and oil are negatively related. So this US dollar is appreciating, oil is coming down, and when the US dollar begins to depreciate, which it has really recently, oil prices start coming back up. I think today oil prices hit a high for the year. This is just the correlation. This shows this is what they're selling. They're selling oil mainly. The price of oil directly relates to their share price. BP has on their investor relations site, they have a lot of information on their outlooks and stuff. They're expecting higher demand for energy prices. For energy by specifically 37% by from 2013 to 2035. And China, they're saying, is likely to have overtaken the U.S. to be the largest single consumer of oil globally. And they're expecting U.S. to become self-sufficient in oil by 2030s. Basically, like I said, energy flowing east. So, where are their cash flows? Go back real quick. This was really important. Was headwinds in Russia. So BP owns a Russian energy giant called Rosneft, and obviously Russia is seeing high level of sanctions from their foreign countries, specifically the ruble crisis. So it was in December, arguably, or kind of in January as well, another one. But as this goes up, this is showing the ruble depreciation. So in a matter of a couple days, the ruble was devalued or depreciated large amounts. And I think you can, right here, if you look at their BP share price, it went down a percentage, a pretty good percentage with these ruble headwinds that it experienced. BP also had a lot of information on their cash flow hedges. So right here is what I wanted to note. Their liabilities have increased by a lot more, and their assets have decreased for their outstanding cash flow hedges. I think that's basically them. more short positions, I think, which we're going to talk about how they use cylinders specifically. They're short positions. In their accounting, they were using this value at risk technique. So they were stress testing and having this system of valuing the current hedges that they own, the value of them. And what I thought was interesting, they even went on to describe cylinders is what they use. So it's long call options and short put options. So the right to buy and is what they're buying, and they're selling the right to sell. And they even gave the open positions as of the end of 2014. Main one was receive sterling, pay US dollar, was at $2,787,000,000. These are the same. This is a direct form. This is an indirect form of US dollar and British pound. You're seeing, just like with the other currency we've discussed, that US dollar is strengthening against the pound. And right here, this is going to be the pound relative to the euro. So the pound, as this goes up, the pound is appreciating against the euro. So year to date, it's been around 5.32%, and I think that's helping BP pretty significantly. As this goes up, I think that's benefiting them. So my conclusion for this project is Boeing and Starbucks will hedge against the US dollar based on my charts. Japanese yen depreciation will be a major tailwind for exports in Japan. So companies like Sony, Japanese companies like that, you should see increases in their share prices as their Japanese economy improves, or arguably improves. And then BP is facing the most amount of geopolitical risk. And that's obviously they're an energy company, so you'd expect that. But that's what I took out of that. So what I learned as a whole from the project, I learned a lot, but these are notable things, was derivatives accounting. Just reading their 10Ks and 10Qs, and there's always the derivatives section. Just reading those and seeing how each company discloses their information, and it's all different for different companies. Obviously, reading exchange rate quotations, that was the most important thing to get done first, because after that, it was pretty smooth sailing. And I think this is the most important thing right here, Bloomberg. I use both Bloomberg and Yahoo Finance and internet sources to do this project, and towards the end I realized Bloomberg is the best source to go to. Everything's much easier on Bloomberg, a lot more information, and this was the first project where I had to do a lot of research in finance, and I definitely learned that Bloomberg is very valuable to you. So that was my project. Hope you enjoyed. Thank you.